Don't think for a second that I did not see the rant that Aron went on last night on Twitter. This is something I on purposely did not talk about during the day today because I wanted to make this video, because I think you really need to understand what he's saying here, where he's right and where he is wrong. Now, ultimately, does any of this matter? Probably not. We're going to squeeze sooner or later, from at least my personal opinion. It's probably going to be sooner rather than later, unless court goes just the way AMC likes it to go, in which that's always a possibility. And then you might get a squeeze later on once they actually do raise capital. But I want to break this down for you guys in a much better way. So let's get straight into it. Aron said yesterday, quote, "Some misunderstand the 1-for-10 reverse stock split approved by 87% of March 14th votes." Let me be clear right here. 87% of retail investors did not vote for this. And how do we know that? Well, we have the numbers. For the reverse split proposal, 128 million common stock was voted for yes. And a lot of it was probably institutional investors that either have puts on AMC that we don't have the privilege of seeing at least until the start of Q3, which is another 3 months from now, because the way March 31st worked as being the end of the first quarter, and how all of these initiatives started in the beginning of April, that means any new positions for Q2, puts and calls, while hedge funds do have to report those, they don't have to report them until after April 27th. So we won't know the direction these hedge funds were betting on, or really what they were doing with derivatives, for another roughly 3 months. And it's funny because you had 128 million common stockholders apparently vote for this. The whole institutional ownership of AMC is about 134 million. That means basically all of them voted for this, or a vast majority voted for this. And if you take a look at APE, it's even worse. 528 million apes voted for this, and 50 million voted against it. 10 times the amount of yes votes than no votes for apes. And we obviously know why that is, because hedge funds literally controlled this vote from the start. Common stockholders did not have a vote. Let's be clear there. Even Vanguard and BlackRock, owning such a large majority of the common stock, I mean, did you really have a vote when only 57% of apes needed to vote yes for this? And the top 3 owners of apes, Terra Capital, Millennial Management, and IGC, owns 26% of the vote. Did you really have a chance? I would argue the odds are not in your favor. Number one, and that's the first thing I wanted to point out because it's just wrong. Now, this is where I agree with Aron. He says that, quote, "We are stealing 90% of your shares. You forget the share price rises tenfold at that time. Exactly the same as trading 10 $1 bills for one $10 bill. Either way, you have $10. And this is true, but it's not. To the basic nature of a reverse split, it's condensing down the outstanding shares. Now, what's unique about this, about AMC doing this compared to other companies, is typically you don't get reverse splits that are supposed to benefit the company on a fundamental basis. And we'll talk about how this is benefiting AMC, because I think everyone should hear that. But typically reverse splits only happen to stay listed on the exchanges, on the NASDAQ, the New York Stock Exchange. It's one of those tools where if your share price of your stock cannot stay over $1 for 2 weeks, for running 2-week period in any given year, your stock will get delisted off the exchanges. So what you can simply do is do a reverse split. The stock's going to trade above $1 for 2 weeks. But what normally happens is the stock sells off afterwards. So the inherent nature of the math here, right? You got 10 shares of AMC, the shares go up 10x in value, and you receive 1 share instead for AMC. That is a 1-to-1 ratio. That's very well known, I would say, at this point. I don't think a lot of apes are really confused on that. Nobody's stealing 90% of your shares. The price of this stock's going to go higher. Your share count is going to go lower. It's going to be the same amount. But the psychology, and this is where he's kind of wrong, is the psychology does tend to push down stocks that do reverse splits. Now, a stock split, like what you see in Apple, Tesla, Nvidia, all these other companies do, really in 2021, was because the share price got so high, which is a really good problem to have. So big difference here. Reverse splits are typically never a good thing. If you hear your stock's doing a reverse split or something you were looking at, typically it's best to stay far away from it because, like Aron points out right here, that it's as every bit as easy to short a stock priced at $3 as it is a stock priced at 30, and that is to short it. And that's true, but if you short 1 share of AMC at $3, the most you can make is $3. If you short 1 share of AMC at 30, the most you can make is 30. And I think that's why you do get a lot of selling pressure, typically after reverse splits. But this time's a little different with AMC. Now, quote, the second comment that he did put on here, he says, quote, in your comments, some fear that after a reverse split, short pressure could cause price to go back down, but you neglect that is every bit as easy to short a stock priced at 3 as it is priced at 30, and that's where I got the example from. As it says, a reverse split itself has nothing to do with any subsequent prices afterwards. And like I said, this is true, but it becomes a lot more attractive to play a downside move on that name, or any name really, the higher the stock goes, because there's a certain aspect of investing that is psychological, that, seeing $1,000 stock go down to 500, a little bit more impactful than seeing a $10 stock go to $5. Same percentage move, just different starting points and different ending points, but it feels a lot worse. I would argue it's probably easier for a stock to go from 10 to 5 than a stock go from 1,000 to 500. And you can get into the intricacies if you'd like to. A lot of options, right? Dollar for dollar, when you play options on a big stock, you tend to pay out more, you tend to see more hedging, so on and so forth. But by and large, it's correct. But the nature of investing today does push down stocks after reverse splits. Now, what AMC is really trying to do here, because after all, I would argue AMC common stockholders did not want this to pass. And you've seen a pretty good turnout from apes, right? That really, like I said, if most of or all of these institutional investors voted yes to this with their common stock, that means not a lot of people, retail investors, voted yes. That means a lot of retail investors, most all, I would say less than 2%, voted yes to this. Now, AMC has always rallied after some of these events, so I wouldn't think about it as if this reverse split happens, the trade is done, nothing like that, because this has happened before, right? And AMC always rallies after they raise capital. Now, what I find the most intriguing about all of this is, like I said, typically stocks do, or companies do, reverse splits to stay listed on the exchange. This time, AMC is doing this as a get around of shareholders' request to raise more capital, because how it works is we have authorized AMC to issue, what is it, 337 million shares, I want to say, or 537 million shares, excuse me. Well, they cannot issue more shares than that. But what they can do is do a reverse split, reduce the share count by tenfold, and then they can go back up to that cap again. And they could just issue a ton of new shares. Now, like I said in the last video, the silver lining is that whether you get, short-term bullishness, because maybe the court date gets delayed, or maybe the courts say best case scenario short term, if the courts say, yeah, you're not going to be able to do this, figure something else out. This is against, what your legal requirements are to your shareholders. That's the best short-term case scenario. That's where I think after April 27th, if the judge just said, yeah, you can't do this at all, yeah, you're going to get shorts panicked. You're going to see a 100, 200% day on April 28th. Mark my words on that. If that were to happen. Now, I think it's very unlikely that would happen, but I think it's also very unlikely that this is done on April 27th. The way the option buyers have been signaling for April 27th, they've been signaling that things are going to hit the fan with AMC. AMC is going to fall like a rock. Do you know where the open interest is for that April 28th option expiration? It's concentrated on the put side at the $2 strike and the $3 strike. AMC is currently trading at about $5.20 per share. A lot of hedge funds are expecting a 35-40% decline by April 27th. I think that is far, far too bearish. But after all, when AMC does raise this capital, imagine if the judge lets all of these initiatives go through. There's no revote, there's not another court date, nothing. They just say, yeah, AMC, go to town, do what you guys want to do. Well, AMC historically has always rallied after they have raised capital. And it's interesting because, like I said, they're doing a reverse split to raise this capital. So, in that thesis, wouldn't the short case be gone for AMC if they did raise? Let's just see, for literal shits and giggles here. Let's say they can raise 10 times the amount of shares that they currently have now after this reverse split to hit that peak. So what we want to do to get a rough estimate of how much money AMC could potentially raise is we'll go ahead and look at the value of AMC, call it $5.20 per share. We're going to go ahead and times that by about 450 million, roughly. Because if you got round numbers here, 500 million shares outstanding after 10-for-1 reverse split, you're only going to have, 50 million shares outstanding, if my math is correct there. So AMC would be able to raise roughly 450 million shares. That would be about $2.4 billion as of right now. Potentially more than that, just depends how they go about actually doing these things. The share price of AMC is going to be a lot higher, right, after this split. So you might be talking something, let's just be conservative. Let's say $40 after this reverse split. Say it goes down $10 per share before they do this split. Times 450 million. Now you're at $18 billion. Well, what if the share price is $30? I mean, you guys can see here, the deal does look sweet in the longer term. That's $13.5 billion. The deal does look sweet in the long term. It looks like either courts give you another short squeeze, or AMC raising capital gives you another short squeeze. So in regards to Aron's tweets, and I think this is the main point of this video, I think there's a lot of right and wrong here. Obviously, reverse splits, they don't take away your value. Let's call it that. They take away some of your shares, they give you a higher share price. That's not stealing from you necessarily. You're not stealing 90% of your shares. I think we're mainly clear there. But there is a psychological effect after reverse splits. A lot of investors go out, target those stocks, and short those names. AMC is wildly different. I would argue that there is a big short squeeze risk. There's 26% of the float that is legally sold short, not to mention derivatives, not to mention what we're not going to mention, wink, wink. It creates an interesting dynamic. And AMC raising capital, well, if that happens, it's going to take a little longer, but I think you ultimately crush the short thesis there, and you ultimately get a squeeze as well. Only my thoughts. Leave your comments, questions, or concerns down below in the comment section. Hit that like button and subscribe to the channel if you have not already. And if you guys want to come trade with me live in real time, link down below in the description as well. Thank you for watching, and I will see you in the next one.